Business has a class of investors to address. Generally, the aviation space, I think is more suitable to institutional segment of investors. And I have a reason for it. Why I consider that it is international class of investor, the institution class of investors, I think to whom I think the aviation space is more suitable. Largely because of the fact that I think there are too many variables to look into. You have one of the major factor in the aviation business is the seat load factor, as we call it. On the other side, we have the aviation turbine fuel cost, which is I think required to be seen because 50% of the revenue goes into spending that kind of a money. Plus I think the ground infrastructure, etc., I think which the aviation companies would keep on engaging themselves with, I think that is also a reasonably good amount of cost. Generally seen that I think an aviation business succeeds when I think they manage their maths properly on every aspect. The Indigo, which recently came into the market, they, out of 9 years of their existence, in last 7 years they have been into profits. And they have seen the situation of high crude oil prices, they have seen the situation of low crude oil prices, they have seen the situation of economic lullness and I think lower load factors, etc. Yet they have been profitable in 7 years out of 9 years. So certainly I think they have been managing their cost structure very well. And that's one important aspect, that if this part of the variable is managed well, I think you could succeed. Unfortunate part is that in aviation business in the world, not many companies have succeeded with a sustained level of return for investors. They have passed through their turbulent ups and downs in the world market. So that is one of the reasons for which I made my first point, saying that more suitable to the institutional class of investor, where the fund manager, the analyst, I think they look into the business inside out on a day-to-day basis vis-a-vis the individual investors. So, not against the business, but per se, I think would like to say that I think this business demands that kind of an insight into the subject.
I'm sure Brinkle was very inspired by that Indigo IPO as well. That garnered a lot of eyeballs. But we have another question coming in.
Good morning, sir. My name is Jai Vasanji and I'm a student of the Capital Markets batch. Sir, my question too is related to the aviation sector. So Warren Buffett is publicly known to stay away from the aviation sector, whereas our ace investor, Mr. Rakesh Jhunjhunwala, has interests in aviation. So what are your views on the aviation sector as a whole? Are you as bullish as Mr. Rakesh Jhunjhunwala or as bearish as Mr. Warren Buffett?
Lots of interest in the aviation space, Deven. What's
the first point, I think that Warren Buffett, he is having investment in aviation company. He has investment in the aviation business. However, I think when I look at the investors' profile and they invest in the company, I think my first point, which I said a while back, I think is extremely important. Every investor assumes a kind of a risk and return profile. Suppose if you invest because somebody else has invested in particular business, I would suggest that I think you also look at your risk profile. Quite possible that your risk profile may not be matching the risk profile of the other investor. That is the first fundamental point that one needs to look at. The second aspect I think which one must look into is, as I was making earlier a point, that if you are going to engage yourself thoroughly into the business and keep monitoring that business inside out on an every situation basis, then probably I think you can make the best out of that investment. But if you are just going to follow somebody while investing, that could possibly put you into some kind of difficulty at some point of time if you have not done your homework well. So I think apart from that, I already communicated that I personally find that I think those companies which manage their cost well, they could possibly succeed better. There are examples available in the global space. Southwest Airways, Ryan Airways, I think among the low-cost carriers, they have succeeded with sustainable profitabilities over the last so many years. Indigo holds all kind of promises probably I think to succeed into this space. So one need to look at I think this company from a relatively longer period of time from now onwards.
I think I'll just add to what Deven is mentioning is that the situation in the developed markets and India is different. So you must remember that. Everything was going wrong for the aviation industry in India till about a year and a half back. Since then, look at what has happened. The ATF prices have significantly come down. Economy has started picking up, and the travel, air travel, the occupancy, the seat, that some of the airlines are at 90% plus now. The infrastructure, there is a significant emphasis on aviation infrastructure built by the last government as well as this government. So lots of things are falling in place for the aviation industry in India at this point in time. And that's exactly the reason why I think some of these savvy investors, and you mentioned some names, are looking at aviation industry in India at this point of time. It doesn't mean that Mr. Buffett is doing something wrong or somebody is doing something right. It's just seizing the opportunity which exists at this point in time. I think that's exactly what is happening here.
Okay, thanks for that. On that note, we'll slip into a quick break right here on the show, but do come right back because I have a classroom full of very bright students from Welingkars who will be interacting with our market experts on BNSN on campus. Stay tuned. Hi everyone, welcome back. Still tuned into BNSN on campus, and we're right here at the Welingkar's campus right now. Devin Choksi and Sudeep Bandopadhyay are here to answer a lot of questions for some of our first-time investors, of capital market students as well as finance students right here at the Welingkar University. So would like to start off with you then, and you've got a question for our experts.
My question to you is, I would like to have your view about Indigo IPO. We've seen that the company has the highest market share and it also has shown consistent profits over the last few years. On the other side, there have been investor concerns about dividend payouts by the company. So how would the stock market react to this on the listing day? And also, will the price be underwater as in the case of CCD, Cafe Coffee Day?
Lots of questions on aviation.
Yes, and I'm happy that I think they've studied the subject so very well. Yes, I think on one side the company has followed the policy of taking the complete dividend out of the business, and before listing itself I think they withdrew the full amount of dividend, and not only dividend, I think the part of tax also I think got withdrawn from reserves, and as a result of which I think on a given day they dipped into negative reserves as far as I think the business reserves profit is concerned. Now, I think coming back to this particular aspect about the listing and the gains, etc., there are few things which can't be compared, I think, with all IPOs. In this company's case, they are having 86% of the stocks still with the promoters of the company. The balance stocks going into the marketplace, about 5 or 6% is staying with the anchor investors who cannot come on, in the market to sell it. And balance part of the stock is getting in the hands of or staying in the hands of the other investors who are basically, I think, they have invested through the IPO. So safely assume that the amount of liquidity that the stock would have in the market on a listing day vis-a-vis the other IPOs which has been talked about, I think would be relatively less. So that could possibly control the situation on the supply side. And when your supply side situation gets controlled, probably I think the price also gets controlled. That is what I would like to believe. The business part I think I have already answered. I think one more point which I could possibly add out here is the valuation wise I think the company is fairly rich at this point of time. At the price at which they marketed I think price to book value of around 8 to 8.5 times EV/EBITDA they have marketed. On the other side, I believe that the other companies in the global marketplace I think are available at EV to EBITDA of relatively lesser sum. So to a greater extent I think would like to say that if the stock is available at a bargain price at some point of time during the course of the journey, then probably I think it would be a good opportunity to buy into the stock.
I'll just add to what the Vinay just said. I think aviation in India is going through a sweet spot. Whole lot of things which were not working for aviation industry has fallen in place. ATF prices are down. Demand for air travel seats have increased significantly. Aviation infrastructure across the country is falling in place. So lots of things are working for the aviation companies at this point in time. And there, as it was mentioned, there is a significant demand for aviation stock at this point of time. Indigo IPO was for a very small quantity of overall companies' paid up capital. So we believe that the demand post-listing also will remain, and most probably you will not get into a situation like a CCD where post-listing the prices corrected significantly. So Indigo, most probably that situation you will not see. As I mentioned earlier, aviation world over is an industry which you have to very, very carefully watch. It's not an industry where you invest and you forget about it. If you have invested, keep monitoring, exit at the right time. Don't fall in love with an aviation stock.
I don't think you should emotionally get attached to any stocks either. I think that would be some advice. But what I've definitely discovered about this bunch of students is A, they love to fly, and B is they love to drink coffee, because the next question is coming in on the CCD IPO.
A very good morning, sir. Mariush Chaturvedi. Sir, I'd like to ask you in the light of the recent CCD IPO, should one avoid investing in high-priced IPOs which leave nothing on the table for investors?
Thank you.
Deven?
Well, high price IPOs, nothing available to investors on table. These are some of the questions I think which are most applicable when the investor is having an objective of flipping the IPO after listing. To my mind, I think those who look at the investment from the long-term aspects, then probably I think they would study the business first and then probably buy the company. As I was talking earlier also, in case of CCD, on a standalone basis, the business is brilliantly built, I must say. There are very few companies where you can carry the similar kind of example, at least in India, where in QSR space they have developed this kind of a business. Unfortunate part is that this company is operating out of the holding company structure which is listed. And it is not the CCD which is listed, but I think the holding company of CCD which is listed. Because of that opaqueness, the investors are not very comfortable. That's the reasoning out here. And as a result of which, I think we are seeing a discounted price in CCD stock, the holding company stock. I would think that beyond the point of time, I think everything gets discounted in the price. So one will have to look at this company relatively more systematically now than before. It is available to you at a discounted price to the IPO. So certainly I think one could look into it, I think, with the fundamental merits that the company is offering, particularly for the coffee business, as I would like to put across.
Okay, that's the advice coming in, and I think we've exhausted a lot of questions on the IPOs recently. But in fact, I was chatting with one of the students back here, and there seems to be a lot of interest as well in the e-commerce space, Deven. So let's get in a question on that.
Good morning, sir. My name is Rucha Shukla. I just wanted to ask you, e-commerce in India today is considered to be a booming and a great theme, but still the valuations we can see on the stocks are less attractive. Can you just suggest why is it so?
Deven, let's get in your thoughts, because that is indeed a question that I think a lot of our investors, especially first time, will be interested in. It is a sector that is booming.
Well, I think when you study this particular business and when you start looking at this entire subject of e-commerce, you find few things. Cause generally for a success of an e-commerce business, I think you should have a very proper, strong supply chain management system at the back. It is a supply chain system at the back, I think, which produces the profit and not the front end. The front end is only an engine where you have basically, I think, the matching of the what you call buyer and seller onto this particular engine. The supply chain at the back, I think, definitely plays a role. So those companies which are in the process of building the supply chain, they are spending a lot of money, they are burning a lot of cash. And as a result of which, I think you find that they are not making profits, and as a result of which you find that these companies are quoting it as abnormally high valuations. According to me, I think this is where I think the investment philosophy should work. The company which has got the fundamentals in place of supply chain management at the back, they would be the first choice, I think, that one would like to look at it. Rest of the things I think would be on the merits of the business. But on the e-commerce per se, it's a brilliant future. So obviously I think we'll have to select, I think, companies on the merits for sure.
All right, Deven, as well as Sudeep, it's been a lovely interactive session. Thank you so much. I think you'll help all of our students go to the head of the class when it comes to the stock markets.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.